How can we tap into a fund of funds? Well, first, you have to understand what a fund of funds even is. And let's take a look first at what some of the different kinds of funds exist in the marketplace. Most of the funds that people talk about are mutual funds. Those are baskets of stocks mostly that larger companies will put together. When we talk about the funds that most of us are doing in real estate, there are many different kinds of funds, but primarily they fall into an A or B category. The most are direct investment funds, where investors give us the capital, and then we take that capital and we go and we spend it on some investment property. When the profits come in, we share the profits. When the capital comes back from the investments that we make, we tend to give back the profits on those investments, but keep the capital, reinvest the capital, and keep moving the deal on and on. Now, here's what's important about that is we have a responsibility to keep that money moving, which means that we're always looking for deals. So if you have a lot of deal flow, it's better to have a fund because the fund gives you ready cash so you can go get better pricing, you can go get better deals, and be ready to go all the time. So that's the basics of a ready fund. And each of those kinds of funds will pick a charter, and a charter tends to be the theme of the fund. So, for example, we're going to buy distressed assets, we're going to buy notes, we're going to buy real estate, we're going to buy apartment buildings, we're going to buy hotels, whatever it is that you're going to buy. You might also further narrow the field by saying that we're going to buy in this part of the country, or we're going to buy A, B, or C class properties. So there's lots of different ways that you can define it, but having a charter is what makes it possible for the investors to understand what your goal is and what you're out there trying to do. Now, what's a fund of funds? A fund of funds is a fund that actually doesn't acquire real estate or other assets, but rather buys a little bit of another fund. So there are funds whose whole goal is to invest in other funds. So for example, if a fund is $10 million, they might give $1 or $2 million to 5 or 10 different funds, and each of those funds then would do the work that they do and then pay them the preferred, and then the fund that receives the money would then spread that out. What's difficult is that most of the time, those funds are not ready or willing to be treated like retail investors. So if you have an investor class of shares, most of the time the fund of funds is going to be more sophisticated, and they're going to ask for some better kind of deal than everybody else gets. And that's generally the issue with dealing with a professional group of investors. So you have to give some thought to that. But a fund of funds is a great place to go for capital because they have lots of capital. They're looking to invest the capital. They're generally hands-off, although they'll look at their management statements and they'll want to be involved at least peripherally. But for the most part, they're great investors, and you have to go out and find them. First trick to finding them is know to look for them. And now that you know something about them, you can go out, you can start asking people who are in the business if they know of any fund of funds that they can talk to. So there you go. Good luck. Do well in this business. It's a great business. So go out and stake your claim.